love the channel and find it useful in becoming a happy retiree. Subscribe today. Brian, good morning. Welcome to Money Matters. How can I help? Where are you calling from?
Calling from Greenville, South Carolina.
Cool.
How are you doing?
Good, good. How can I help, man?
First of all, I want to say I really enjoy your show.
Thank you.
My family has been with a couple financial planners over the past decade or so, and we've recently run into some suitability issues. And presently, we're in the process of reclaiming our assets and taking them over ourselves. I'm not a financial person and don't really have a strong financial background, so I've been trying to read and educate myself. To do this, we've looked at some of Ben Graham's books. And what I'm trying to decide is, are we defensive investors or enterprising investors? And I'm trying to figure out where to go and what advice. We're actually moving to Atlanta, but we've talked with some advisors in Atlanta that, for our asset class, they were kind of on the bubble for what they want to take. And so just looking for some advice and what you would recommend.
It's funny. There was an article in Barron's this weekend that talked about the robo-advisors. And then there was another article in the Wall Street Journal this week about registered investment advisors. And I participate in one of each. In full disclosure, I've got a registered investment advisor, which is a fee-only investment planning and management firm, and then I am part of Wella, which is effectively a digital advisor firm. And what's interesting about the cost, Brian, is that the costs have kind of converged a little bit, where the pure digital advisors, Betterment is an example, which is one of the first robo-advisor firms, they've actually increased their cost to provide human advice, because there's only so much. You can't charge close to zero and run a business with real humans, right? And that is the question I think that you guys have to answer as a family, you personally, and maybe and probably the rest of the family, is that. And by the way, I'm a huge fan of the Benjamin Graham methodology. In fact, I've written about his 50% bond, 50% dividend paying stock, low valuation stock strategy. I love that strategy, whether you're 30 or you're 80. But I think you've got to decide as a family on what level of cost are you willing to pay. Is it 0.25% a year, or is it 1% a year? That's the range, right? You're going to get a lot of human advice at the 1. You'll get very little human advice at the 0.25. And I think if you can make that decision by talking to a couple of different firms, then you can find a really relevant strategy that matches that. But first, you've got to decide on how much help you really want. And in the new environment, it sounds like you're probably coming from a big brokerage firm, and you're going to end up with some sort of registered investment advisory firm. So I'd be happy to talk to you guys as well a little bit more offline. Just send me an email through wesmoss.com, WESMOSS.com. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.